Good morning. Happy hump day. Um, Kind of an interesting overnight session given Netflix was awful and the markets just didn't really care that much. ES is still green. NQ down a little. RTY down a little more. But overall, for a 7% down on one of the Mag 7, and I believe some others, SMH and others, are also struggling here. SMH is down 2.22. Nvidia is down. Oh no, they've come back to flat. They were down a little bit. Meta down 0.25%. Microsoft was green, I believe. Last check, yeah, Microsoft green. Netflix was down big off their earnings, 7% or so. About 7.5%. So, I mean, you're getting some support of, Amazon's down over 1%. You're getting some support from the Mag 7 to the downside, but the overall markets aren't having it. And what that tells you is that breadth overall is probably pretty good. I would say we probably have a decent breadth number right now. We don't get that until the market opens. But when you have a Mag 7 stock miss and tank fairly heavily, 7%. I mean, it's part of the expected move, but you would expect some follow through from the market. And mostly what we got was consolidation. So we've consolidated ever since we moved up on the 20th last Friday. We've been consolidating here for a couple of days, and now we're coming into Wednesday. And you can see our numbers on the screen. If you're new to the stream, what we're doing is we're live streaming. Just Invest with Jacob, my commentary on the market, but more importantly, Invest with Jacob Pivot Point Pro. It's our indicator, and it's been just outstanding day in and day out, giving us great entries into the market. We day trade and swing trade with it, and the day trades we do on the 5-minute SPY chart, which we're on right now, and they have been very successful. We've had a little bit of a no trade this week. So on Monday, it was a trend day up. And on trend days, you ignore these sell signals. So we had one chance at a sell that failed. So we were just 0 for 1 on Monday. Tuesday, same thing. They gave us a trend day down setup, failed that trend day down. So we actually didn't take this buy, but it was a really nice buy signal. And this sell was really nice. But we didn't take any of these because once you get into trend day status, you don't want to mess with the market because generally it's going to follow through. It didn't yesterday, but generally it does. And these buys tend to turn into losers, so we don't take them. So just an overview real quick. If you're new here, like I said, we're trading IWJ Pivot Point Pro. And you can see, all the way back, if we go, let's expand this a little bit so we can see it better. It's a little bit crowded. First things, if you're new, we're in TradingView. It only works in TradingView on the left in yellow, or I guess on the right of the bars. But yellow is pre-market trading, blue is post-market trading. So you have pre-market and then regular trading hours and then post-market back into pre-market and so on. So that has to be turned on for the indicator to work properly. And if we go into, say, the last week or so here, we'll go back to the big drop on the 20th, or on the, was that the 13th, I believe, maybe 14th, right here. So the big drop on the 14th from 668 all the way down to ultimately 652 in the post market, but we had that absolutely nailed. So you had a buy signal early in that day, and that ripped higher for a nice winner. They came over, it chopped, and then gave you the sell exactly on the dot, and you got this extraordinary move down right here from the indicator. That created a trend day down, obviously. So this buy signal, even though it was good, was ignored. And then we were past 10 o'clock Pacific Standard Time, 1 p.m. Eastern. We don't trade past that time period because the market tends to turn choppy. So that Friday you had 2 monster winners, and then you come into Monday. You had this buy that was a winner, this sell, this buy that was a winner, this sell that was a winner, all good stuff. On Tuesday we had, believe it or not, maybe we only had one winner on Tuesday. That's this week. So even going back further, I guess, yeah, was that not the big drop? What is wrong with me? Oh, no, the big drop was over here. We had the big drop as well. So you see the sell signal right at the top of the big drop, and it dropped straight down. I mean, this is a massive, massive move. It's 673 straight down to 659. So it's 24 points straight down with this sell signal, and that's a day trade. So that was just an incredible sell. And then that Monday was a little choppy, but then Tuesday we had a really good day. They came down into support. We had this sell winner, and I believe this buy winner on Tuesday. So all of it really, really good stuff. Just I just didn't go back far enough. And then this week, like I said, trend day on Monday, so we had one losing trade, and yesterday we had one losing trade as well. So nothing crazy this week because we've just been going sideways. And the market's been a little bit weird, but we've been consolidating since the 20th, really. This range that we're in, they need to break this range to give us some kind of movement. But until they do, you can play the edges of that range, meaning the top and bottom of it, playing the support and resistance of this flag right here. Because it's not it's a 3-point flag, so it's not great. But if you play off the bottom, generally they're going to take you to the top, and that's an okay winning trade and so on. So just been a tight range, so not much trading going on over the last few days. Morning, Shocker. Welcome to the stream. Morning, Sam, Maxime. Welcome to the stream, guys. Happy to have you guys here. So that's what we're trading today. Let me turn it off. I don't know why those keep turning on. We don't want our crossover and cross under alerts on. Those are not ready to be used. So we just have simple buy and sells. You buy calls. We buy calls when the market gives us a buy signal. We buy puts when the market gives us a sell signal. And we simply trade that. We also use it for swing trading on the weekly chart. And on the weekly chart, it gives us signals where we want to take 3 to 6 months, really minimum of 3. I prefer 6 or more months in most cases because weekly moves take time to play out. You can see several 8 to 12 week moves that continue in the same direction, especially bull moves. So you want to give yourself time to capture as much of that move as you can, if not all of it, and take profit on the way up or down, whichever way you're going. As far as the markets go, we're in kind of an interesting zone right now. Now the ES here, the ES, you get the move down, right? And we can count this as an A and potentially an ABC back up. Now the problem with that is they're above the 764. They're basically back at the all-time highs, and they're consolidating up here, which is not a great sign for the bears. So from a structural standpoint, the bulls have the advantage here. And what we would call this, instead of an A, B, C for B, and then C down, is you would call this move down. So you would call this 4, and then A and B, and this would be C up for the top of 5. Now, if you're wondering why 5 is a 3-wave move, it's because we're in a diagonal and have been for quite a while. And in diagonals, every move is 3 waves. That's part of Elliott wave theory, and that's one of the advanced concepts. And those are really important to understand when you get these really ugly structures, but the market keeps grinding higher or lower against what you would deem a normal impulsive structure. You need to understand diagonals because that's what's playing out, and that's what we're in, and that's what we've been in for quite a while, which is confusing a lot of people. So our options are either this is 4 or A. Okay, if it's 4, we're bullish, and this is A, B, C, back up to new all-time highs, 6,850, 6,900, even 7,000 would be very reasonable. If they squeeze, getting to that big round number would be something that the bulls tend to want to do. So 7,000 wouldn't shock me at all. Or this is A down, and this is A, B, C in a flat, and this is a B wave flat, and then you'd see C come down into that 6440 zone, which would take us to the weekly 21 moving average, which is a very common mean reversion is what they call it, very common target when they move down and break the daily 21. And it happens about twice a year. and it only happened once this year. So, in all honesty, it's kind of a, you have conflicting data, but given that you had Netflix tank overnight on earnings, if the market doesn't follow through to the downside on that and give us some kind of breakdown today, the bulls are pretty strong, and I'd start to really favor them going to all-time highs as opposed to that C wave playing out to the downside. Statistically now, if you just look at straight statistics and throw, other things out the window, when you have a 2.5% drop on a Friday like this, statistically, the next week, which was last week, is a positive week, which it was. And then this week is statistically negative. Now, negative doesn't mean it's going down to 64.40. Negative can mean it pulls back and it's down 0.01%. That's still negative, and then goes back up. But statistically, this week and actually next week are both negative weeks more often than not. So you have some competing data. This is definitely a bullish structure. The bulls have control until they lose some support, which is about 67.15. If they lose 67.15, then the bears have a chance to try to run it back down. But until then, the bulls are in control, and we would look toward that 68.50, 6,900, 7,000 type area. NASDAQ is the exact same thing. We're at the all-time highs. They've been grinding sideways across the all-time highs here. Have not been able to get through yet, but it would still be the same count on either one. It's either A, and this is A, B, C up for B, and you'd look for a flat back down into 23.6, which is where roughly where the 21 weekly moving average is, or this is 4, and you have A, B, C, and they're headed towards 25,438 to 25,472 would be the next area higher, and then 25,681 after that. So either we need a decision up here. They're either going to break out, which right now the bulls are in control. I can't say that enough until we break support. On the NASDAQ, support is basically 25,000. If they break down below 25,000, the bears have a chance to run it to the downside. Hey, Will, welcome to the stream. You said, Jacob, do you ever see a setup for a day trade that looks so perfect you would double your usual number of options? What would that setup look like? The answer is no. So the setup goes away. No, all trades are treated the same. There's about 175 indications that go through each one of these buys and sells. And a lot of it has to do with high volume areas and high volume support and resistance. And so that's one of the reasons we don't trade the pre and post market, is that there's very little volume. You can see there's almost no volume down here. So it creates a lot of false signals. Like you can see these sell signals and buy signals are just not good because there's just no volume in them. It's unable to kind of figure out the calculations without the volume. The volume really makes it hard, which is why November and December are traditionally our worst trading months, because you have the holidays in both of those months. You have a lot of holiday trading periods, and volume decreases in general. And so you see a lot of tougher trading days during that time. But almost all of the trades are treated exactly the same. We're looking for a key support or resistance. So something like here, and then a rejection, and then an entry, and then looking for follow through, or down to here, looking for a rejection and follow through. And what we're looking for is, so all the algorithm is doing in a very small nutshell here is it's looking for exhaustion around high volume and low volume areas, and it's calculating a whole bunch of things to calculate exhaustion. And when it sees that, and then it starts to see weakness around those areas, it's looking for an entry and a follow through, or at least a bounce to reset the indicators, other indicators such as the RSI or other things. And so it's looking, what the goal for the indicator is trying to calculate a move that will give us 7 to 10 ES points, or roughly 70 cents to $1 on the SPY. And that will usually unless volatility is high, that will usually give us about a 20% win. And so we look to take our first profit at 20%, and then we find out if there's follow through. So you're looking for a move like this, roughly this is 672.39 down to 670.86. So this was like $1.50. This has a little bit of follow through to it. But you're looking for something like this to take your first profit. And then ultimately you're looking for, it's got to go. Yesterday was very choppy and stupid. Ultimately, you're looking for some follow through where you get, a buy right here. You get your 20% roughly probably right in here. And then you get follow through up to here, which gives you another 20, 30, 40% on your money. And you reduce your risk. And you maximize you let your runners run. You stop out when you stop out, and that's allowing you to maximize your gains and minimize your risk. And what we've done actually to even minimize our risk more, which has been helpful. It showed up yesterday actually, or maybe Monday. I can't remember. But when we when we enter a trade. Normally we have we still do. We have a 50-cent stop. So what that means is they're at 672.16 right now. So 50 cents below that is 672.66 or 671.66. So our stop would be 671.66, 50 cents. If it moves up and we get 10% gain on our money, so if we have a $1 option and it goes to 110, then we move our stop up 25 cents to reduce risk. So that way, if they don't give us the 20% win and they backtrack and then fail, we're only taking half the stop loss now. If they move up to within 75%, so if they get to 115 on that $1 option, then we're moving our stops up to break even so that we're not getting really close to a win. We've had several trades get like 19% or 18% and then just absolutely fail and go back the other way. And those end up being really big, not really big, but bigger losses than you want to incur because it takes time to run up and it takes time to come back down, and that theta burns, and so your loss is bigger than if you just stop out right away. So if you move your stop up with price, we're reducing our risk quite a bit there and essentially running a trailing stop system that is allowing us to really maximize our gains. So no to would I double down on anything. We did just increase our trade size from 1/2 to full or 25 contracts to 50. Because we have had so much success with the indicator. We've taken a 100K account, run it up to 160 something. I can't remember, 65, I think. We're up 60 something percent on that money. And so we've had enough that we can now run 50 contracts safely at a small enough percentage of our overall capital to be profitable. So the indicator, you're not going to win every trade. In fact, we had a really bad August and then a flat September. It was 2 months in a row that it just wasn't great. And then last week, we made $18,000 in the week, or maybe even more than that. I can't remember. But it was a week of absolutely crushing the market, which that 18,000 would have been a record month. 14,000 is our record. And I think October, should it stay pretty normal here for the last 9 days, should be a record month for us. Because that's how trading goes. You had 2 okay months or bad months or whatever, a flat month and a bad month, and you have a record month following it. You're going to have winning streaks. You're going to have losing streaks. You have to understand that there are swings in trading, which is why you only put 1 to 5% of your capital out at a time. And you have to understand that trading is all about discipline, stops, and following the edge that you have. The indicator that we have is an incredible edge on the market, but it's going to have losing streaks. Every single trader, every single system, every single person has losing streaks. That's part of it. And if you can't mentally digest that and all you do is run to the next thing because you had a losing trade somewhere, you're just going to be a loser. And that's all you're going to be. And I don't mean that in a negative way, like you're a loser, buddy. I mean, you're just going to be a losing trader because you can't slow down and say, it's okay to lose. In fact, it's necessary to lose because 1, it's a learning opportunity. Why did we lose? Is there something we can tweak? And 2, if everybody won every trade, there'd be nothing to trade because it would be too easy and there would be no game. This is a long-term game, and it is a game. Can you outsmart the other things in the market? And once you find an edge, you apply it relentlessly every chance you can that makes sense, and that's how you come out on top. It's not about getting rich quick. It's not about scams. It's not about being some YouTuber that doesn't know what they're talking about but trying to sell stuff. It's simply about making money, and that's all I care about, and that's all I care about for my people. Our key levels today, 677 and change is the max. So if they are going to run it up, this is likely to control the move up. And to the downside, our 1-day minimum is down here at about 665, we'll call it. We are getting ready to open, so I do want to get ready for that. George T., welcome to the stream. Hello. Maxime, to all, I see a 7 to 8 second delay today between real time and Jacob's video, which is quite small delay for YouTube Live. Well, that's good. Cats at home, good morning. Welcome to the stream. Maxime, welcome to the stream. All right, we got a sell going here pre-market. We won't ever take that, but what that means is we're in a buy cycle from down here. So we bought. They're seeing weakness because we're coming back up into this resistance zone, and it's telling us a sell now. That is near the pre-market high, so that will be something to watch if they do break out to the upside. What I'd like to see, honestly, is kind of a first candle up that resets and then a sell signal. That would be pretty good because we're right at this call resistance and 0 DTE gamma wall. So 672 here and 675, those are our major resistances. We'll see how we open. As of right now, what I would expect, or what I'd be looking for, not expect, is a little bit of green to start, to reset this and get a sell stop, and then get a new sell signal printed in regular trading hours. However, if they spike it down, I'll be looking for them to attack the pre-market low and hold one of these areas, 670, 671, or 670, 69, and give us a buy signal. True pre-market low, basically the same area, 670.48. This pre-market low only gives you the pre-market side of things. The actual pre-market low is 670.50, just so you guys know. All right, about 40 seconds to go. I'm going to get a trade set up so I can print it quickly. Tight overnight range. So that either means a really brutally boring day today, or they're coiling to break out or break down. We'll have to see. I would like to see break down, just based on Netflix and other things, but we'll have to see how the market handles today. Could just be a terribly awful 2-point chop day. Our pre-market range is pretty small, 672.38 to 670.50. It's less than 2 points on the SPY. So, okay, looks like we're going to get, well, we'll just see. So far, push down. I like to look at supporting evidence. Right now you have a positive ADD. I said breadth was probably green today, 253. You have a negative VOLD. So that's an interesting combination. Usually they're both positive or both negative. NASDAQ diving hard toward its pre-market low. ES also diving toward its pre-market low. So we'll see if we can get a buy signal or a reversal off of this area down here. You'd like it to go a little bit slower. When it goes this fast, it doesn't always complete the sell cycle. So we may or may not get a buy signal down there. In other words, it doesn't have time to reset and get everything back to a place where we can transition out of this buy and into this sell. It goes too fast. So that while the market's trying to turn over and roll over the indicators, they don't have time to do that. So we'll see. We'll see what we get down here. You're not doing swings? No, we do swings. But for the purpose of this video and what we do here, it's day trading. We do swing trading in my rooms, and then on the weekly chart we do swing trades. And welcome to the stream, Harold. Or Harrell. Sorry, I don't want to mess it up, but I think it's Harold. All right, challenging the pre-market low here. This will be a key time because if they come out of the gates ripping and take it to the downside, then that 665 area may come into play as a kind of dive and bounce situation. In other words, you may see if they can break down some kind of move down here, and then later in the day this. If you don't know what these levels are, they are Mentor Q levels. You can see over here I have Mentor Q gamma levels end of day and intraday. They are incredible levels to trade off of. You can see we opened right at the call resistance, and they shot down off of it. We had a sell right above it. It just happened to happen in the pre-market, so that stinks because we miss it, but that would have been a winning trade. But these are incredible levels to trade off of. If you want to get those levels on your screen, Mentor Q is a paid service, but you can get a 20% discount by using my code down below in the description of this video. If you click on that, you get 20% off. Full disclosure, I also get a kickback from them, but I only advertise 2 things. I don't make money from, or much anyway, I don't make much money from affiliate marketing. I only will say or recommend things that I use and that I love. And the only 2 products that I use and love that I recommend are TradingView and Mentor Q. They are absolutely outstanding, especially Mentor Q. It is absolutely an outstanding product. All right, NQ at its pre-market low. ES basically at its pre-market low and pushing. Thanks. Sounds very professional until now. Not sure what you mean. I don't know what I said to make it not sound professional. I mean, I like to have fun. I'm not I'm certainly not in a suit, I can tell you that. But what we do is very professional as far as trading goes. This video is simply to highlight the indicator. It's not about swing trading. Swing trades take time to play out. Day trades play out right away. So doing a live on swing trades is a little bit tough. Okay, I think NQ looks like it's below its pre-market low. Let's go look here real quick. Yeah, it's diving pretty good. Coming into last week's high, that'll be its next. It's bouncing a little bit off of that. Down here at 25,128, they do have some solid support on the NASDAQ, so keep an eye out for that. ES is now breaking its pre-market low. Let's go back over to the SPY here. The pre-market lows were pretty, well, I guess it's technically not breaking the, there it goes. So they both pushed through their pre-market low. Now we're looking for trend day possibilities, and unfortunately, guys, when trend days happen, we don't really trade that much because the market's moving in one direction, and our whole system of trading is trading back and forth. So in other words, we're looking for them to hold an area so that we can get this bounce and trade this. We're not looking to chase trends. So we'll see what confirm. Why are these off? Let's turn these back on. Now what we're looking for is a back test of the 21 VWAP, this area here, any of these 3 moving averages, and then a lower low. If you get that, that's what confirms trend day status. So trend day status starts with breaking either the pre-market low or pre-market high. So they've broken the pre-market low. Then what you're looking for is a back test of any of these levels, and then you're looking for a lower low after that. If you get a lower low after that, more often than not every time, yesterday was a failure in this regard, but more often than not, the market is going to trend in that direction. And so buy signals are going to be losers more often than not. So we ignore buy signals on these kind of days. Now we're not there yet. Still looking for a better. I'd like to see a little better back test, but This certainly is starting to look like it wants to be a trend day to the downside. And this, with Netflix doing what it did is a little more what you would expect, but I think they wanted to trap the buyers up here and squeeze them so that they can either do one of two things: trap all the buyers, create late sellers down here, trap them, and then push higher, or trap the buyers and just sell it straight down. Now we're starting to get a little bit more of a bounce. I'd like to see a better back test than this first one, so I'd like to see him get up to at least VWAP here at 671.22, or at least close. I would take 671.16 or so, but just something that's a little bit better of a back test. Because all you're doing right now, these are all momentum reads. So the 21 is your trend. So as long as it holds the 21 on the 5-minute chart, the trend remains intact. So if it comes up to the 21 all the way up here and then does this, you're in a trend still. The 8, which is the red on the chart, that is your momentum indicator. And as long as it stays below the 8, it means momentum is strong to the downside. Same thing on the upside. As long as it's above the 8, momentum remains strong. As soon as it gets through the 8, momentum starts to crack. And VWAP is VWAP. I mean, it can be above or below. It doesn't matter. That's just your volume weighted average price, and that's going to tell you where price is based on volume, or your average price is based on volume, and they will trade back to that quite often. So rejection of any of these three levels and a new low tells you that the sellers are winning and want to continue to win. Now, I will say the ADD is bouncing sharply. It is up to positive 417 after opening at about 1 or 200 or so. I shouldn't say sharply, but it's moving up well. So when the ADD is moving green against a potential trend, that's a warning sign that the trend may not play out. You're going to want to see the ADD start to sink a little bit here. Vold is also climbing. It got back to slightly positive and now is rejecting that a little bit, but still, green on this first 15-minute candle. So these are things to keep an eye on when you're looking at a trend. So when I'm looking for a trend to follow through, I want to see the ADD supporting that trend. In other words, I want to see it negative and falling or holding. I don't want to see it going green because that's telling me that under the hood they're buying. I want to see the Vold going negative or holding, mostly going negative though. I want to see continued selling, and I want to see price continue to hold and push down. You also want to make sure that all parties involved are on trend. So ES is slightly red, NASDAQ is red, RTY is red, and then I always like to look at the banks and Dow Jones Transports. The banks are slightly red, and Dow Jones Transports are basically flat. So we don't have a whole bunch of vicious selling yet. That doesn't mean we can't change things. The ADD just snapped back down pretty hard. So we'll see how it plays out once we make a lower low, because now we have a back test of the 8. So essentially, here's where we're at. You back tested the 8. Now if they push down and make a lower low, trend day down. If they come down and then back above the 21, then the trend day has failed, and we're very likely to come to 672.38 or higher. Interesting data here. ADD is now reversed all the way down to a red candle. Volt is reversed to a red candle here on the 15 minutes. Still holding under the 8. NASDAQ does look a little more bullish than ES does at the moment. So we're back above the 21, closing above that, which looks like they might do here. 7 seconds left. Kind of nullifies the trend day down setup. And now we're looking at 672.38 or beyond. We don't get a buy signal here because time is a factor in trading and time is a factor in setups. And 3 bars is just not enough time to reverse this sell signal into a full sell cycle. And that's what we're looking for. So what we're looking for is we're looking for the sell signal is in. So let me start over. When you get a buy signal, it is actually at the end of a selling cycle. So you have a sell cycle that's come down. The sell cycle starts to weaken. We're still in a sell cycle, but you get a buy signal because it's weakening and we're coming off of a level it likes, and you get the buy. Now the buy runs through its cycle, has enough time and price to get through the cycle, and then we get a sell signal. The sell comes while we're still in a buy cycle, but it has to have enough time and price, not just price. It has to have enough time and price to complete the cycle to the downside and give us a sell cycle completion to give a buy signal down here. Technically, we are still in a buy cycle. Wrong button.
Looking to remove margin access on your or in written form. If you would rather submit the request in writing, you may do so using the margin application form. To begin, select Support, then select Forms and Applications. Navigate to update your Schwab or Schwab.
ADD is now sinking, as is price. It's a dangerous time here for the market coming down and breaking this low. Still would technically qualify. So they closed above, but basically held the 21. When you see the next bar do this, they held the 21. So if they close below or push below this price, I would expect them to trend down today. This market has been torture, stuck in the range, going from one rail to another till break out or break down. Yeah, I mean, that's just how the markets work. They have a breakout, and then they'll trend for a day or two in that direction, then they'll consolidate, and then they'll decide if they're going to continue trending or reverse. Yeah, I mean, it's just how it works. You don't get good trading every day. And that's what people don't understand. You don't have to trade every day. In fact, we don't trade every day because there are a lot of days that aren't good for it, and you're just going to lose money and throw money away. I tell the guys all the time on our calls, this is going to be sideways and choppy. I'd stay away because that's what's the most likely scenario to play out. And you have to play the probabilities. That's all trading is. What is the most probable thing that's going to happen? And play that. And that means that some of the time, the least probable thing is going to happen. Just like when you spin a roulette wheel, the least probable thing is for it to land on one of the zero, well, I guess any given number, but specifically to land on a green, zero, and not pay black or red. 48% of the time it's going to pay black, 48% of the time it's going to pay red, and 1.96 on whatever it is on a 2-0 wheel, it's going to pay the green zeros. So from a 50-50 standpoint, basically, the green is the least probable thing. However, it does hit. So you have to understand that probability doesn't mean winning. It means that it's the most likely thing to happen, and the least likely thing can still very much happen. Two charts doing two different things. NQ is bullish, trying to break out over its where it sold from in the pre-market. ES is bearish, or SPY is bearish. Both are not bearish, but They're still down here, whereas NQ's up here. ADD is dropping. It's negative 22 now. Does the long stop indicate the long cycle is over or just weakening? A long stop indicates that a buy has failed. That is the stop for a buy alert. So it means that you're still in a sell cycle. And welcome to the stream, Otis. Just based on the ADD and the VOLD and the RTY, I tend to believe the bears more here than the bulls. You have a negative ADD, negative VOLD. RTY is negative, almost 0.5%. XLF is negative. Transports are flat. You're just seeing a lot of red here. And that doesn't mean they can't flip the script, but typically when you're looking at what your data is, that data set tells me that the bears have the advantage here. Was that a top for gold? To be determined. I think gold still has gas left in the tank overall, but I do think you're going to see a decent pullback here. We scaled out of gold a little while back. Not fully. I had 25% still in. But, you know, we got in all the way back at 49 in the... So we got in a fund called EK Wax. It's a precious metals fund. I directed our people to get into that all the way back in April of 24. And at that time, it was at $49. And right now, it is at, even with the monster fall yesterday, it's still at 121. That's where I directed 401k money, because I said that the market was getting very, very elevated in risk. So we've almost 49 and 49 is 98, and then you have another 22 on top of that, 23 on top of that. So what, 150% on our retirement money, even after yesterday's 12-point fall. So, and we only have 25% left in. Once it hit 100%, I took some out, and then I took a little bit more out at like 100 and I forget 10 or something. So I still have 25% in here, looking to buy back in once we get to a support level that I like, but I think it's at least a temporary top for gold. If they break support, then we have to talk about different things. But if they hold support and give us a structure we like back up, then we would do that. Your indicator is awesome. Thank you, Otis. I appreciate that. We put a lot of work into it, and it's all about following the rules. The people that fail with it generally aren't following the rules or don't understand the concept of the big picture. They want to be rich in the same week and overextend and have a bad week, because that's what happens. You have good and bad weeks, mostly good, but sometimes bad, and you got to be able to survive those swings. I really appreciate that, though. Prabs, welcome to the stream. NQ went up to close the gap from last night, so maybe that's what it needed to do first, then join ES. Yeah, very possible. Gap closes are very common, and should they reject that fully here, like I said, the ADD is sinking. And when the ADD is sinking in the face of a green rally, typically that rally gets sold. So you have ES in a strong sell cycle, and NQ actually is in a buy cycle. So you have two markets doing two different things, and you're just not going to get trades when that happens, because one of the key features of our indicator is it tracks NQ, SPY, and ES all at the same time, and it wants all three markets to be in sync, because if they're not in sync, you're not seeing broad buying or broad selling. You're just seeing one market do one thing and another do another. And when that happens, you get a lot of chop, which is what you're seeing on the screen right now, is one bar up, one bar down, one bar up, one bar down. So until they get in sync, you're not going to see a trade, because that is the hallmark of what we're looking for. We're looking for key levels with volume. We're looking for the markets to be in sync. And when that is the case, you are getting good trades. When that is not the case, you tend to get chopped. This is where people overtrade, because they see these two green bars and they're like, oh, we're going back to the highs. And then they see this big red bar and they switch real quick and they're like, no, we're going back to the lows. And they get, and they just get whipped around, because they have no patience. You have to have patience in trading, and not every day is a trading day. Not every bar is a trading bar. Not every spot is a place to be in. You just need to have patience and wait for the right setups. Hello, maybe a stupid one, but what is the ADD? No, it's not stupid at all. There's no stupid questions. The ADD is the advanced decline line, and it tells you the delta between the number of stocks trading above yesterday's close and the number trading below yesterday's close. So when you have a positive ADD, that means more stocks are trading above yesterday's close, and generally the market is overall bullish. When you have a negative ADD like we do now, that means more stocks are trading below yesterday's close, and the market is generally bearish. Now it's only negative 44, so I would say the market is generally flat, and so is price. So that makes sense. But it is trending red quickly. So it got up to 400 and change positive, and now it is sinking quickly, which tells you that they're flipping stocks to sells or to below yesterday's close, a lot of them, to create that delta from positive 400 and change to negative 40. That's a 500 stock delta swing. And that tells you that they are selling a little more across the board. What you get a lot, though, is you have to watch the Mag 7 versus breadth. So the ADD, if you're negative 100, but it's a lot of stocks that don't really matter to the market. It's a lot of little stocks in the ES or the S&P or overall. Then it's not going to move the market as much. The Mag 7 themselves can move the market against the ADD. So you always want to look at the Mag 7 and see what it looks like. I also include in that SMH and Tesla because they're heavy market hitters. SMH is red today. NVIDIA is green. Meta is green. Microsoft is green. Netflix getting crushed. Amazon getting hit decent. Tesla down 0.5%. Apple getting hit decent. And Google doing okay. So you have a mixed bag here, which really matches up what we're seeing. You have a mixed bag here. You have an ADD that's basically flat, and you have a Mag 7 that's a mixed bag. So if they're not all kind of in unison, you're going to get something like this, and you're going to get more consolidation, and it's just creates an annoying trading day, honestly. And welcome to the stream, Huawei. Huawei, I think. Maybe I said that right. Probably not. Sorry. Since we aren't likely to get a trade here for a minute, let's look at gold and Bitcoin real quick. So gold, actually, I'm going to do a different chart. Let me go back to the SPY here. Need to go to our weekly chart. So we entered gold. Let's see, that's 23, 24, right here. About 217 or so. A little less than that. It's right around 200, I think. But anyway, right in here. At 200, it got to 400 here, more than, or basically doubled in that time over the last year. And now we're pulling back. Now, if you look at the weekly fibs here, let me zoom back out. I don't know why I put them so far over. So they hit the 2.0 fib. Now, typically the 2.0 is going to be your target. It was my target overall. 400 was my original target. However, we didn't really have what I would call a wave 4 yet. You did have this triangle right here, which technically could be a wave 4. I just don't think it is. And so I do think gold's got a pullback in the tank where they can pull back and then head higher. I do think it's going to be a lengthy pullback, not just like a week. I could be wrong. The market's been moving at insane speeds lately. But if we measure our pullback levels here, we'll see that the 382 is 287. that they can come back to and still be perfectly fine on this bigger chart. I think they'll probably hold this 300 triangle zone. So I think maybe they spike through it into that zone, or maybe just come down and tag and go. But I do think this is the zone that they need to hold. If they break below 287, that's the first warning in gold. And then breaking below 250 would be a really bad sign overall. But they have plenty of downside room. They haven't even gotten near the 236 on a bigger time frame. And I do think that they have one more ultimately bigger run up toward maybe 450 to 500, possibly, before they're done on gold. But I would be looking to buy anything back into this consolidation that bounces, me personally. Bitcoin is very, very interesting. It has a, we're going to go to the daily on Bitcoin actually. It has a potential Wyckoff here, and that is an interesting thing to me. So you have a lot of features of the Wyckoff. So you have your first high, your what do they call it, upthrust, and then your pullback, and then you have a new nominal high, and then you have a pullback that breaks this low. So this is very Wyckoff like. And then you have your UTAD or whatever they call it. I forget all the names of them, but another nominal new high, and then they broke the low again, and this is usually where you fall off the cliff. Now they've been bouncing around here, and they're chopping on this heavy support. It's going to be really important for Bitcoin to hold 100 for the most immediate bull path, and then they're going to come down into 80, and ultimately they can come down into 73 pretty quick after that. So there is some support here, but if Bitcoin starts to break these supports, this 100 support specifically is a big one. If they break that, they're going to come down to 88, and then we'll see what happens down there. But this can very much be this. Now, if they don't break these supports and they get back over 118, then I would be looking for 140 on Bitcoin. So Bitcoin is chopping on a very, very key area and hasn't been able to get away from it, and it's starting to look a little weak down here. If they break this low, we could start to see, well, if they break this low, 670. If they break 670, we can see acceleration to the downside. At that point, it opens the door. There's not a whole lot of support down here until you get down into the 667 area. So if the bears, big capital I, capital F, if the bears can break this low, that would be a potential waterfall effect on the market. Ultimately, though, with the NASDAQ doing what it's doing, I don't think you're going to get a huge drop unless the NASDAQ starts to play catch up and starts to accelerate early. The NASDAQ's just still hanging out in a fairly bullish way. Not bullish. They're just well above this area where ES is trying to break through this level of support right here. So you have this. This is ES support right here. They've come into it about 4 times now. 1, 2, 3, 4. This is the 5th time. Trying to get through that. And if they can, there they go. They're going to challenge these lows. And then if they can get through that, we'll see if they're able to get through here, 670. That's going to be a fairly big level. You got your 0 DTE put support there. It's a high volume level. I would expect it to, given just the overall kind of dynamic of the market, I would expect this to hold at the very least the first time and create a bounce. I don't think they're going to rifle right through it. It's certainly possible, but I would want to see a lot more aggression from the bears on the ADD, the VOLD, and NASDAQ. NASDAQ is trying to play some catch up here. That is a good start. Okay, there is a lower low on the ES, so now 670 becomes a really important level to watch. We do now finally have the ES and the NQ in sync. We'll see if they spike the lows and reverse it here, though. Typical bear style move, or a bull style move for a trap. NQ has not made a new low, FYI, just if you're keeping track at home. Need to put this back on ES real quick. We do have a couple of things going on here that we have to monitor. One is you have a potential trend. Again, they've made a lower low after backtesting the 20 or 21. But you also have a heavy support zone here. They test, I mean, this is, let's see, yesterday's low was 70, last week's high, this week's average. I mean, you just have a lot of support in this zone. So you'll need to see follow through, but we would take a long should we get one, but the NASDAQ wasn't. So the NASDAQ needs to close this candle somewhat bearish, and they'll be in a sell cycle as well, and then we could look for a long trade after that. However, you are getting a spike and reversal here. You are getting a ADD that is improving. It's back to positive 94. So I think that today is probably going to be another consolidation day where, um, they've set the low and they will be looking up toward 672.38 next. And then maybe if they can break out, do that. But I think that more likely you're going to see them hold the range overall. So they got through support, back above support. Now they're back testing it again. This line here is going to be kind of the defining line on who wins this battle down here. It's like beginning from wonder and second part like way. Oh, I gotcha. But you're doing great. Thanks for the thorough explanation. You're welcome. You're welcome. They're slowly draining momentum off NQ so it can sync up with the S. Yeah, they're trying to. It's getting there. We usually see weakness when we get close to the contract expiration on GC and SL, but that seems early than usual. Contracts expire November 26th, so it can be a chop fest in metals. Yeah, we'll see. I mean, they can definitely pull it down here a little bit. It's been kind of parabolic for a couple weeks. I feel like we were waiting for more people to enter the roller coaster before the big money starts to ride, which will probably get everyone in the wagon sick, usually. Jacob, are you sitting on 670 or 671 strike for potential bounce? Yeah, I mean, if they give us one, uh, uh, we'll have to see exactly where that is, but in that zone, yes. Right now, it would be a 671 call strike if we took a call. You find those roller coaster or those 90-degree drops on a roller coaster scary. If they did 90, man, that would be scary. I don't think I've seen any go 90, but that's. You think range will hold because more ER, such a big ones like Tesla? Potentially. I mean, they may not hold. I mean, they could definitely break down here, but I think when you start to see this kind of sideways weak price action and no real definitive movement, and then you see things like the sweep of the lows and a reversal. Now, this candle here, I will say if they, I was expecting a little more green after this. This red candle here does change that perspective a little. But you're seeing, the ADD isn't really sinking. It's basically staying around zero. And you're seeing price slightly. I mean, price is basically flat. RTY is getting beat up, but everybody else is basically flat. So we'll see. I mean, we could certainly see follow through. If they can break the low, again, 670 is going to be the number. If they get down there and can break through, then I think we're in roller coasterville. But typically when you see we are seeing Nvidia crack though. It's almost back to flat. It was up over $1. Typically when you see a trend day, you see the Vold and the ADD playing along, and I don't necessarily see that yet. So 670 I think will convince me. If they get through 670, we're going to likely trend to the downside. I don't think the Bears are going to get too many shots at this, so I think it's do or die here. They're either going to go ahead and break it down, or this is going to get flipped. There's a bunch of contracts piling up at 67.60. Yeah, I know that 56 is support, which is basically going to be 670. It's the same basic level. So we'll see. I mean, like I said, this is going to be the determining factor right here. If they can get through this line, then you should see some acceleration. NASDAQ is catching up a little here, trying to break their low. And there they go. Like I said, they're either going to get through this now or reverse it up out of here. I didn't think the Bears. I certainly didn't want to see this because I do not think the Bears were going to do this. So we'll see if they can follow through. They're through now. This can be a spike and reversal, a run of stops. So we're not through yet. You want to see acceleration now. You really want to see them start to hit the gas. They're on the ES. They're about a point away from support. So this basic area is going to be key. But getting through that, and we see follow through to the downside. NVIDIA has turned red. That helps. Meta has turned red. NVIDIA's back green, but they're flat. So getting more of the Mag 7 on the red side will help a lot because they move the market. They are important to the market. All right, they're through 56 as well, so now you want to see acceleration. Very key time for the rest of the day. There goes the acceleration. That's what we wanted to see. $67.50 will be our next zone to watch, but really, there's not a whole lot until down around 667.50. We are in a trend day down, so we won't take any buy signals today. This is a trend day that I don't see, and believe me, this is not to say they can't find a place to bounce and get a great buy signal. My point is there's not, normally when we get a trend day, we're coming into a place like a high volume level, but there's not really anything all the way down to the 1-day min that I want to trade off of. Maybe this week's low, maybe, but not really. So as far as trades go, I'm going to stay on for a few more minutes just to see how this plays out. But ultimately, we're not going to get any trades today. It's just one of those days where the market never quite got in sync with the NASDAQ. The ES never got quite in sync with the NASDAQ. And when they're out of sync, they're not going to throw you a signal. So unfortunately, we didn't get a sell stop up here and then the short, which would have been epic. But that's how it goes. I mean, you're going to miss moves sometimes because the data isn't set up for what we want, and we're only going to take things that are stacked in our favor. So like I said, I'll be on for a couple more minutes just to kind of see how the next couple candles close, because this is I would say this: if they race down, we're at 7:30. If they race down in the next hour and get all the way down into these 1-day min zones, and you get a buy signal from there, then I might entertain a long. But even then, I think I would probably just sit it out for the day. I do think the NASDAQ, though, is approaching its 1-day min. Gotta wait for it to come on the chart. I can't remember. It was 25.1, I thought. Right in here somewhere. 25,000. Shocking. 25,000. What did I say support for the NASDAQ was? To break down and give the bears some hope. It was 25,000. So they do have some room still. Both of them have room to the downside to come on down and tag these areas. Pretty good volume on these last two candles. So if they continue to follow through, this volume is encouraging. It's almost as much as the opening candle, which was also heavily red. So a lot of selling volume coming through today. Be careful of a falling knife situation in the next few days. I'm not saying today. I think the 1-day min usually will hold these types of things, but you could definitely see a potential breakdown. This is going to be a key level. 25,000 is a key area to hold for the bulls for a lot of reasons, mostly support and structure. But if they can't hold that going into tomorrow, you could definitely see this C wave start to materialize to the downside, and that would be a definite trying to catch knives if you're trying to long off of certain levels. So just be careful with that. With that, I am going to go ahead and close the stream for today since we don't have much activity. Well, zero activity today, unfortunately. I wish the ES would have given us this sell stop move up, and then we would have got the short that we got on NASDAQ, because it was a pretty epic short. But it didn't. So such is life. Short stream today. Sometimes that's how it goes. Sit on hands, enjoy the rest of the day. It's sunny here. Hopefully you got good weather. Go take a walk. Don't watch bars. Even if it's a buy that takes it back up, you're going to be frustrated. Just ignore it. See where we end and go from there. If you're in my room, we'll have the call at 1 like we always do and go over where we're at that point. I appreciate all of you guys being here. And if you're not in our rooms, check them out. You get a 1-week free trial. You lose nothing by checking it out. If you like the indicator, which we didn't use today, but if you did like it, you do get that discount, so check that out as well. All right. Thanks, everybody, and we'll see you next week.